So certainly there's been more digitization. There's more institutions moving processes online. There are non-traditional lenders coming into the mix. We've also seen new digital entrants focused on winning the consumer with an improved user experience for a specific aspect of financial services. This is sort of an unbundling of what a traditional bank offers. So for instance, we've seen this with neobanks coming online, such as Stash, Chime, and Vero. I was actually talking with Tendai, our chief economist here at LendingTree, and he had a really interesting perspective, a little bit more specific to the mortgage market. But effectively, he identified that the biggest change is not really over the past 5 years, but really since the financial crisis, where we've seen lending standards become much more stringent. And as a result, the mortgage market is much healthier than it was prior to the crisis, and therefore better placed to endure shocks. More recently, with the moratoriums that were put in place because of coronavirus, this is really an unprecedented measure in the history of mortgage market. And it also signifies that government intervention is sort of now just a normal part of the mortgage market when it is under stress. As we just talked about, digitization will continue. So you'll likely see acquisitions as an important strategy for larger institutions to participate in that trend. Also, interestingly, I just talked about this sort of unbundling of financial services with a focus on winning the customer with great user experiences for just specific pieces of sort of financial services. But what we're also seeing is that those companies that are doing well in that space of unbundling, building great user experiences, are now starting to rebundle and add a more diverse set of financial services to their offering. But they're also trying to stay true and focused on building great user experiences. Also, continuing from my conversation with Tendai the other day, specifically in the mortgage industry, going forward, the big story is going to be about continued low mortgage rates. So probably declining from where they are even today and remaining low for an extended period of time, which will support demand, but will also inflate prices. So the demographics are also really set up well. There's a very large millennial generation that's now in sort of the prime home buying age. So there's a strong base of demand, which is supported by low interest rates, but the challenges will be higher prices and income disruption that we've seen from the coronavirus, and also the overhang, at least in the US, of student debt that many of the potential home buyers have. So we all know that innovation is very difficult. The bigger the organization, oftentimes the more difficult it can be. At LendingTree, we've developed strong mechanisms to drive both operational excellence of our core business with strong optimization and experience improvements, along with a mechanism to create other engines of growth through investments in innovation and big bets. So these innovations are happening really across many areas of LendingTree. Our insurance team has built an in-house agency to support unique and valuable user experiences. Our mortgage team has developed many new loan shopping experiences, and they're testing which experiences work best with which consumers. I'm most directly involved with our financial wellness product, and we've had a lot of success helping users find savings on their existing debts and understanding and improving their credit. But we know there's so much more to personal finance than that. And so a little over a year ago, we spent a lot of time with users. We ran a lot of focus groups. We spent a lot of time learning and prototyping solutions to become a broader financial home. And this is really where I see the innovation on the My LendingTree side of things. We set in motion a long-term vision, and we're leaning into it. This entails breaking your financial life down into 3 dimensions: your credit, which is largely your past financial performance and often how institutions may view you; your cash flow, which is your current financial performance; and your financial future, which, as the name suggests, is how prepared you are for your future financial needs and protections. And so our credit dimension is already mature. And right now we're moving into helping users manage their day-to-day cash flow. We're iteratively building these capabilities and measuring product market fit as we go. We're acting very much like a startup, garnering investment from LendingTree with key KPIs and targets. I think we're really well positioned to help users improve their financial lives by driving insights and behavior change. And we've also been able to focus a lot of energy on this. So I'm really excited by how LendingTree handles innovation and how we've been able to drive innovation on the financial wellness side of things, as well as our lending marketplaces.